Well, let's talking about Kenya. Let's go to Kenya now and have a look at the markets there. The Kenyan shares yesterday were down in response to poor earnings numbers and a bit of profit taking apparently, around about 1% down, and the NEC down there to a 2-week low of 4,502 points. And the shilling was stronger yesterday, just slightly, 87.45 to 65, stronger than on Tuesday. Let's now cross to Kenya, where we have Moses Waireri, who is a research analyst at Genghis Capital. Moses, let's start with the overall performance there of the stock exchange. Poor earnings numbers. We did say that the market was anticipating those numbers. Some disappointment there, but not too bad, a 1% drop.
Yes, thank you, David. Like we said earlier, that the rally was primarily instigated by increased bullish anticipated earnings figures, but once Barclays kicked off the earnings season, the numbers were not what investors had projected, and we've seen the way they are reacting to those figures. So we do expect continued downward pressure going forward, and we do expect a larger proportion of it to be from profit-taking activities by local investors.
Part of the disappointment there is dividends. Kenyan investors, or investors in the Kenyan exchange, like to have strong dividend flows. Any particular issues around dividends in the latest round of results?
It all boils down to the earnings that they reported. If you look at Barclays, they reported a growth of, if you look at their profit after tax, it was about 8%. It's just NIC that reported an increase in the EPS to about 6 shillings, and they're paying a dividend of about proposed dividend of about 1 shilling, and those are the results they published yesterday. So it's only Barclays it's only NIC that have reported an increase in the dividend, and Kenyans are very big on dividend policy because they look at it as one of their income returns from investing in shares.
Talking about NIC Bank, it was suspended from trading in the afternoon session yesterday after releasing full year results, and they talk about a 40% growth in interest income there. What's happening around NIC?
With NIC, you could see that their core business is doing really well. If you look at their loan book, it's grown by about 26% year on year. Even if you look at their liabilities, if you look at their customer deposits, it countered the growth in loan book. It also grew by about 26%. But if you look at the interest income that they earned and the interest expense that they had to pay out to customer deposits, that was a major block. That was a major expense for them. And if you look at other operating expenses, it was majorly flat, resulting into a huge, a big jump, a double-digit jump in profit before taxes and profit after taxes, resulting into an EPS growth to about 6, like I mentioned, 6 shillings.
Now, why the suspension?
In general, there are very good results.
Yeah, why the suspension from trading yesterday, and does that suspension extend into today?
No, the suspension from trading yesterday was to prevent speculators from taking advantage to the release of the results. That's why it was suspended yesterday in the afternoon. But it should start resuming trading today, in this morning.
Let's look, talking about the banking sector and the telecom sector, and what's interesting there is that the banking models, they are showing growth, and you've got a telecom sector where you've got a company like Safaricom taking advantage of the growth in consumer buying of new technology, new communications technology. A nice synergy there between the banking sector and the telecom sector.
Yes, if you look at the mobile penetration in Africa as a whole, it's very low. If you look at Kenya, there's huge potential in the mobile industry, the telecom industry, and banks have recognized this, and they are targeting and leveraging their products towards mobile telephony because of ease of access for their clients or their target clients. So we've seen about 2 months back, Mshwari, that was a product developed by Safaricom and CBA Bank. We've seen recently that Safaricom and KCB have just signed a new deal where KCB can access the database of the M-Pesa agents to get clientele and grow their loan books from there. So this is a nice synergy, and we should see continual innovation in terms of products that these two sectors can provide.
And as you say, there's a lot of growth potential in that sector in much of Africa and including Kenya. Just looking at some of the shares that have moved by quite a lot, Centum, 7.7% down, and BAT, that's a big one, 9.35% down.
If you look at Centum is one of its year ends, the fiscal year ends in 31st March, and investors are basically trading on it on the fact that they're about to do a groundbreaking ceremony for their real estate project. Yeah, and that's why Centum has been rallying for the past few weeks. In terms of it, now it's reached it touched a high of about 15 shillings, and that's where profit taking, that was the trigger for profit taking on that counter. With regards to BAT, investors are still awaiting their results. There's still the major impact or the major drive for BAT is the dividend that they pay out, because BAT is a mature industry in Kenya, so majority of their earnings they usually pay it out as dividends. So investors are very bullish on that aspect of the results.
Let's just take a look at the macro political picture in Kenya. I saw a report that the Chief Justice of the country has said that he and other judges have been threatened for trying to stop a candidate accused of inciting tribal violence, that's Mr. Kenyatta, I gather, from running for the presidency. And it just raises again political risk around the elections and perhaps investor nervousness?
Yeah, this basically hurt the investment community. It paints a very bad picture for Kenya's investment destination, despite the tremendous potential that Kenya has in so many sectors. So the political, it's a pity that we can't separate the political from the economic sector, or the synergies between the two are so interlinked. It's unfortunate that we can't separate the two. And if these political calamities continue, it will definitely have a huge impact on the economy, a detrimental impact on the economy.
Well, that'll be most unfortunate given the many other positive indicators in the Kenyan economy at the moment.